government came in at a time when oil prices started cooling off, nothing to do with them. Everybody needs luck, and luck is an integral part of life in that sense, so it's fine. I don't grudge anybody anything, but I'm just saying that oil prices cooled off, money continued to remain easy, commodity prices globally collapsed, and the sweet spot around India, because growth had also kind of bottomed out to a large measure. How much of this, therefore, was just coincidental, that it was associated at a time when the government came in, as opposed to saying that it is to do with the government that the entire bull market or a new bull market has begun?
I think it's obvious that, if you talk of oil prices having gone down, commodity prices having gone down, global liquidity being great. So I would agree with you. I mean, these are factors which would have happened anyway, and therefore definitely they were a big source. They would have been in any case a big source for the markets to go up. There's no doubt about that. But I think what also did happen was that because the previous 2, 3 years, 4 years of the previous government were what was called policy in action completely, so there was a lot of hope also which got generated by the election and the new government coming in. Now, I personally would think that 1 year is still too short a time to say nothing is happening. It's, the government has tried to make changes. It's a slow process. We know India is a very complex country. And therefore, it's, even if it does happen, I think 1 year is too short. Maybe over 3 years, 4 years, the impact of all that could happen.
It's your forecast of earnings, and therefore what are the underpinnings? Because at the end of the day, when we all go to sleep, as it were, it's the earnings that will underpin the markets. So what's your take on that, assuming that there is no black swan that happens on the external front of liquidity and oil prices?
Yeah. So there are 2, 3 points that I'll make here, Jakes. So first is on the point that Sushil made. He quoted, I think, directly from the Wealth of Nations, the Bible of modern economics, right? So inflation and demographics. So demographics is a given in India. I think the government's biggest achievement of the last 12 months, and I know we are all dismissing the government's achievements, is that they have nailed inflation. And inflation in India has gone down not because oil went down. It's because the government proactively curbed rural wage growth, which was running at 20%. Now it's at 3-4%. It proactively supplied food stock, brought food price inflation down. Think about March. We had weather disruption everywhere in the country. Food prices went down. When that used to happen, say in the last 4 or 5 years, food prices invariably went up.
I think it's a great point. Yep.
So I think we have nailed inflation. Demographics are given. So if inflation has been nailed, I think growth will come back. The reason why we lost growth in the last 3 or 4 years is because inflation was too high. And there's that balance, very fine balance between inflation and growth. And I think we've got to that point. So it's only a matter of time in my view. And I would say quite aggressively, just a matter of 3 months. And we will see growth indicators turn. I track a lot of high-frequency indicators like real M1 growth. It is like this now, which is transactions in the economy have picked up meaningfully in the last 2 months. I track capital spending. It has gone up like this. So a lot of the lead indicators to headline economic growth have actually already turned in the last 2 months. If the government spending picks up, which is what I think will happen in the first quarter, I think you will soon start seeing it translate into corporate earnings growth. The point is that corporate earnings growth are coming from a very low base, so they have an excellent base effect. And if the economy picks up like the way I'm anticipating in the next 3-4 months, I think you will see earnings growth rise almost vertically. So from around 0% to maybe 20% in just 2 or 3 quarters.
So what's your take on the March 16 numbers in Sensex terms?
Yeah, so I think in broad market terms, where I have greater confidence, because the Sensex is a funny animal, 1 or 2 companies can distort that. I think 18 to 20% growth is pretty reasonable, par for the course.
And that's puts index earnings at what level?
The index earnings could actually be higher. It basically means that the market, which is currently at maybe 18 times earnings, is trading at maybe 15 times forward, which is not at all asked for the market, which is why, the earlier point, that this doesn't really feel like an outrageous bull market at all. I mean, it's at 15 times forward earnings, give or take a few points. So I think the growth cycle will turn faster than what most people are anticipating right now, which may be the surprise for the second half this year.
Breaking this down from an individual stock picker's perspective, you have these complex factors, and we keep hearing that things are not moving the way they ought to. And yet you're in a world where hopefully now earnings will start picking up. but the external world might be reflating, in a sense, something that is not good from our perspective. And we've always performed well, as he says, when liquidity is easy. And so do you see, for instance, big structural issues as far as, let's say, the rupee is concerned, or interest rates? Because people are sort of holding their breath on interest rates coming down. You actually have debt yields going up, the rupee is weakening. Do these things worry you in terms of?
You're much better at macro than I am, Jakes, because I do a bottom-up stock picking and a top-down selling approach. So the thing that worries all asset classes across the world all the time now is, when is the Fed going to raise rates? Because that will ultimately affect all asset classes at all periods of time. The 2 points here, Jakes. First, of course, September, December, they keep postponing it. So will it come this September or will it come in this December? Difficult to say. But given the fact that in Europe there are negative interest rates, I don't think the Fed is going to start raising interest rates in America. They'll even pass maybe September, December. They're also mortally scared of raising interest rates. The second question is not when do they raise the rate, but how will they raise the rates. That's also important to pay attention to now, because typically the Fed uses the Fed funds rate, which banks borrow from each other, to use that as a signal to raise interest rates. But with so much liquidity sloshing around in the system, that is going to be ineffective. So what they're going to use, from what I've read, is the reverse repo rate in order to try and nudge up the interest rates. So I would watch that carefully.
Where are you putting your money right now?
I won't say stocks, but
No, not stocks. I mean, sectors or...
I'm putting my money in. I mean, just to be perfectly candid in this area of disclosure, I did sell some equities because I had made some other asset purchases. But on the balance, I buy in technology, I buy in real estate, I buy in media. I'm bullish, So, and I find valuations compelling enough. I mean, I don't see that the stocks that I own, from a bottoms-up perspective, will do badly over the next couple of years. I expect them to do well. I do expect the media stocks to do well, because I think digitization will roll out, cash flows will start generating. I think real estate stocks look like a bargain to me. I think some of them are trading at, really very, very throwaway prices. I buy some technology that's trading at yields now. I mean, Infosys at 3% yield, for example. Some other technology stocks have declared a very hefty dividend. So, it's not that I'm short of ideas to buy. There are pockets of excesses because of low interest rates, but there are also pockets where I think market is mispricing stocks. And because I have a smaller portfolio, I tend to look at individual stocks. I tend to find those bargains sometimes.
Let's say, talking of absolutely undervalued, over-pessimistic valuations in the market on certain spaces, do you find areas that you can sort of put money in? Since we've been so bearish in, at least in questioning, I thought we could just have a welcome break on the...
real estate stocks, they are perhaps, ahead of the curve right now, but maybe 6 months down the line, 10 months down the line, whenever a final new low is set in them, cyclically over the long-term charts are looking like, and again, minds are biased from the news we read. If Narendra Modi is talking about a home for everyone, and still that sector will languish, whether, not these stocks, there will be some other stocks, or there will be some other corporate entities emerging. But looking at those charts and the kind of flavor possible going ahead, that is one sector I would like to keep an eye on to look for long-term triggers. We are, of course, too early in that. But more than, say, answering in terms of, where are the real deeply undervalued pockets technically amongst the sectors, I'll quickly jump into answer one reverse of that. The refinery stocks that have gone through the roof, and which, say, at around 220, 30 levels, BPCL was, nobody was thinking of talking about going to a new high, and we Elliott wave guys talked about A, B and C wave coming. Now that has come, will thump our chest and tell you that now that the crude has collapsed, because the crude collapse, refineries have a put option inbuilt. The crude chart is now looking like we'll go back to 19, BPCL looks like we'll go back to 230 again. So now those kind of reversals are in there. But broadly, reconnecting with, say, what Ridham said and what Mr. Kapoor said, this area of disbelief, and within which certain professionals sort of having a consensus, very unique times, and the conventional sense of thinking real long-term bottoms and real long-term tops, perhaps we are nowhere close to either of them. And inside a nice chugging trend, when the engine of a car is not overheating, the clutches are not on the, we are not revving up on the second gear, we are all into a nice fourth gear ride, And the level of disbelief is, I think, the engine, the fuel of the ongoing bull market, and a 500 or 800 point dip coming in between. So not many sectors are showing those signs of being very close to long-term tops and long-term bottoms. We are still in the middle of a range, and that can keep on expanding.